Good morning, everyone. This is Med City CPA, and I'm doing a short video about IRS publication 5307. This is concerning the new tax law changes for tax filing season 2019 for the tax year 2018. So if you're filing your 2018 return in 2019, this may affect you. I didn't know how to categorize this video. It's a gambit of miscellaneous changes, so I'll just go through them right here. Alternative minimum tax exemption amount increased, so they increased the exemption amount. It went from it increased to 70,300 or 109 and $400, or 5370 if married filing separately. The income level in which the AMT exemption phases out increased to 500,000 or $1 million if filing jointly. So in other words, far fewer people will be paying the AMT. So that might be something to look into if that appeals to you. There's also the repeal of deduction for alimony payments. Alimony and separate maintenance payments are no longer deductible for any divorce or separation agreement executed after December 31st, 2018, or for any divorce or separation agreement executed on or before December 31st, 2018, and modified after that date. Further, alimony and separation maintenance payments are no longer included in income based on these dates, so you won't need to report these payments on your tax return if the payments are based on a divorce or separation agreement executed on or modified after December 31st. So what does that mean? So they're changing the alimony payment structure. So since it's already 2019, I don't think this really affects a lot of people. People that might be subject to it probably already know about it. Because this was a huge change in the family law area where people were trying to get their divorces and separations finalized before the cutoff date if they think they'd be subject to alimony payments. So I don't think that will affect a lot of people. Treatment of student loans discharged on account of death or disability modified. So student loans discharged due to death or disabilities are not included in income anymore. So if you die, you don't need to include your student loan discharge. So that's positive, but I suppose if you're already dead, that doesn't really matter. There's also the repeal of deductions for the amounts paid in exchange for college athletic event seating rights. So that means if you buy like a seat license or other fees paid in exchange for the right to buy a seat at a college athletic events are no longer deductible as a charitable contribution. So, or charitable deduction, excuse me. Combat zone tax benefits available to armed forces members who served in the Sinai Peninsula. So if you served there, you probably need to check out Publication 3, Armed Forces Tax Guide. There's also the change in the reporting healthcare coverage. So you must continue to report your coverage. Let's see. Most taxpayers have qualifying health coverage or a coverage exemption for all 12 months in the year and will check the box on the front of their tax return. So starting in 2018, or for the year 2018, the IRS will not consider return complete and accurate if you do not report full year coverage, claim a coverage exemption, or report shared responsibility payment on the tax return. You may remain obligated to follow the law, and pay what you owe at the point of filing. So that's interesting. So yeah, this is IRS publication 5307, Tax Reform Basics for Individuals and Families. Hopefully this has been helpful.